Hello, everyone. How are you? Hello, Michael. How are you? Hello, Anthony. Hello, Nazar. Hello, Christine and Henry. And Ahmed. And Hal Kelman. And still letting people in. Okay, Hal's joining. Christine, hello. Okay, people are still signing up, so we'll just wait a second while everyone comes in. There's Pedro. There's Stanley.
I'm here too, Rebecca.
Good. Hi. Oh, hey, how are you?
I'm great. You have one of my favorite people, Nazir. We've known each other for a long time. We were both offered jobs. Julian Robertson, he took it. I didn't. July 1993.
Hey, Hal, how are you? Good to see you.
Good to see you.
Okay, good. Let's see if there's anyone else signing on here. All right. Well, I think I'll get started and just warm us up here. So welcome to our Silicon Dragon show, our series. And if you've joined us before, you know the drill, but we have a few surprises in store for today. It should be really fun. And we have a great guest for today as well. And I'd like to introduce him in just a second. So I know many of you know this slide with our books and Silicon Dragon Circle membership. And hello, Paul. And our Zoom and our YouTube channel and our WeChat and our Twitter. And Mike has joined us. Hello, Mike. So still people signing in. So today we have our special guest, Nazar Yasin of Rise Capital. I met Nazar several years ago, and he has spoken at our New York event and our Hong Kong event, and now our virtual event. So Nazar, thank you for doing this. Thank you.
No, happy to join, Rebecca, and great to see you again, and several other people that I know here in the crowd virtually. Hopefully we all get a chance to see each other in person in 2021.
Yeah, I certainly hope so. All right, moving right along. We're going to have a fireside chat with Nazar and a poll. And today we're introducing a quiz with a prize. If anyone guesses all the answers, we have networking and toast, and we have a song today. That's the real surprise. So hang in there. So part of the fun in doing this show is I get to know about the people who are on this show. And I found out a lot about Nazar when we did our prep, what I call our prep. So he's an entrepreneur and a VC in emerging markets, born in Greece, grew up in California and Cyprus. He resides in Silicon Valley and Cancun. Wow. Quite an academic background here, as you can see. Georgia Institute of Technology, Northwestern University, MBA, JD, Goldman Sachs, right out of Northwestern. Then off to do some entrepreneurial work. CEO Fordicom in Russia and Eastern Europe. Amazing track record here. As you can see, that was sold to Mail.ru. And hello, John, coming in. Co-founder of Marco Polo Learning in London. And that's something that he's doing presently. I skipped over director of Tiger Global Management. So I think many of you know that Tiger Global is also very much involved in emerging markets and has a good track record. So Nazar was at Goldman Sachs and at Tiger Global. What a pedigree here. Founder and managing partner, Rise Capital in 2013. He's on 9 boards. Okay. How many other people are on 9 boards? Anyone else looking to come in? Let's see. I don't think so. Okay. I think they will still be coming in. Let's move on. All right. I told you a little bit about Nazar and his interest, which we'll hear about in a moment. Peterson, welcome to the meeting. Rise Capital. Nazar, maybe you want to talk a little bit about Rise Capital. All these are, I know you are running this firm that invests in internet businesses in emerging markets, Latin America, Africa, Asia, Middle East, but maybe you could talk about some of these selected active investments and tell us what they do so that we can give people on the call kind of an idea of what you're all about and what kind of deals you're doing and what the trends you're seeing. So why don't you take it over from here, and I'll move this slide over. But I want to have this here so you can people can refer to these various companies.
Sure. Yeah, no, thanks, Rebecca, and thanks again for having me. So yeah, at Rise Capital, I suppose we're technically a Tiger Grand Cub, I suppose. Just Tiger, and then Tiger Global, and then Rise Capital. And what we focus on, I decided to leave Tiger to start Rise, just because I was seeing a lot of growth in these non-China emerging markets, and so had been involved in a lot of technology companies across Europe and the US and in China, and had sort of seen that the growth of the Chinese internet ecosystem in the early 2010s in particular, and was seeing this next wave of growth starting to take off in the other large emerging markets, Latin America, Africa, Middle East, India, Southeast Asia, and decided to start a firm to focus on trying to help those entrepreneurs to scale up their businesses and create that next wave of unicorns from these markets.
Sure.
And it's been really interesting because over the last 5 years we've seen 1.5 billion new smartphone users in these markets, and so these are predominantly people who didn't own a PC or a laptop before they bought their first smartphone, and now obviously, particularly given COVID, everybody's using their smartphone in these markets for everything. So their kids are going to school on their smartphones, they're watching video content, they're doing all their shopping on their smartphone, they're paying their bills on their smartphone, and so basically all of this economic activity from these markets is now increasingly going through a smartphone. And that's particularly interesting when you consider that, those economies account for 70 to 80% of the world's GDP and population and internet users now and everything. So, it's sort of an order of magnitude larger market opportunity than what China is or than what the US is. So, so at Rise Capital, we're headquartered in San Francisco, but that's not really where we do any of our business. We have offices and team members around the world in Mexico, in Buenos Aires, in Lagos, Nigeria, in Dubai, in India and Southeast Asia, and we focus on investing in companies from those markets. And this is just a handful of some of our investments, and a couple from Latin America. So Gaia is, if you want me to spend time on some of these, happy to talk about it.
Yeah, tell us what they do.
Yeah, so we invest across many different verticals, anything internet enabled. And so these can be e-commerce businesses or fintech businesses or marketplaces or SaaS businesses or, education, entertainment types of businesses. And, there's a pretty good, I guess, cross section of those types of companies. So, Gaia is the largest omni-channel and vertically integrated furniture brand in Spanish-speaking Latin America, predominantly in Mexico. They built an enormous business there. Quesky is the largest online lender, consumer online lender in Spanish-speaking Latin America. Instacaro is the largest online retailer of used cars in Brazil. Gokada is the leading multimodal transportation and everything company in West Africa, sort of like a Gojek, if people are familiar with that, but for West Africa. So
Yeah.
ride hailing, delivery, food delivery, marketplace, you name it, building a huge business there. Iroko is basically like the Netflix of Africa. Hopscotch is the largest online kids brand in India. So about 25% of all kids clothing bought in India online is Hopscotch branded. And India is obviously the largest kids market in the entire world. 1 out of every 5 babies born on planet Earth is born in India. So they're building a huge business. Katopi from the Middle East. This is the largest and first virtual restaurant franchisee in the world. So if you're a consumer in the Middle East and you're ordering whatever, Nathan's Hot Dogs or Pizza Express or Dunkin' Donuts or whatever the case may be through Uber Eats or any other delivery platform, all that food is being prepared by Katopi, and they have the exclusive rights. They're the franchisee of all those brands, and they produce all that food for them in the Middle East and increasingly other markets, building a huge business. The numbers are very, very impressive around that company. And yeah, hopefully that just gives people a flavor of the types of businesses we're investors in. I'd say more generally, what's been really interesting in the last 5 years is, it used to be if you wanted to find, a top decile global technology entrepreneur, 10 years ago, you could only find that person in Silicon Valley, right? It was like, everybody from all over the world came to the US to study and then, went and started their company in Silicon Valley. And then, about 10 years ago, you started to be able to find them in China too. And, but that was it. That was kind of, the only 2 places you could kind of find these top decile, technology entrepreneurs. And now that's no longer the case because, right around 5 years ago, the US basically changed its immigration policy and said, hey, all you immigrants who have started all these great businesses, like Google and WhatsApp and Instagram and Stripe and, the list goes on and on. We forget that most great companies in Silicon Valley, were built by immigrants. Please come to the US to study, but then go home. Don't stay. And so, these very smart people started to say, well, okay, well, it's hard to stay in the US. And not only that, but my home market of, whatever, Brazil or India or whatever the case may be is pretty darn big too now from a internet user perspective. Why don't I go there and start a huge company? And so you're seeing a lot of these like really amazing global category leading companies, come out of Mumbai and Sao Paulo and other places. So it's pretty amazing to watch.
Well, and certainly you've had a lot of success with these companies too. This slide here shows the historical exits, NASDAQ listings, acquisitions, pending IPOs, acquired by Alibaba, acquired by Amazon. It's very impressive, Nazar. What's the common thread? What's the common thread? Is there, how do you find these companies? How do you know which ones to invest in? What causes them to become these, acquired companies, these publicly listed companies from the slide we saw before when they're just, you've just invested? What accounts for them getting to this level?
Yeah, I mean, me and my partners have been really lucky to, in some cases be founders of these companies or CEOs or executives or investors in these businesses. And so we've been really lucky to just be around amazing people and amazing entrepreneurs with amazing world-changing ideas in attacking huge market opportunities. And I think we've, been a part of something like $100 billion plus of market cap created in those markets over the last, 5 or 7 years. So we've been really lucky and fortunate to be a part of that. We've sort of at Rise, we sort of speak like a particular language when it comes to like talking about startups and companies. And internally we call it the 5 M's.
Okay.
And so we'll literally talk about, hey, let's 5M this company. What's their 5M score? And what we mean by that is it's sort of shorthand for the 5 things that we think are really critical for a startup. And, number 1 is management. So who are the people Like, you know,
Right.
what sort of inside edge do they have on this particular idea or industry or whatever, you know, what magic do they have? You know, so I'll just
Right.
give you an example. The Katopi team I was talking about a minute ago, you know, really, really impressive. You know, it's very hard to convince, you know, big restaurant brands like Shake Shack and, you know, all these other guys to literally turn over their secret sauce to you and their supplier relationships to you and
Right.
trust you to basically be their business in a huge region like the Middle East. That's really hard to do.
Sure.
So how on earth did these guys manage to convince 200, you know, huge, you know, global and regional brands to trust them with their entire operation?
Right.
There's like magic in that, right?
Right.
They have some kind of magic that has enabled them to do that over the course of 2 years and to grow the
Right.
business to like $100 million business in
Right.
2 years. And so
Right.
that's kind of management. You know, the other things that we look at, the other M's are market, right? So is
Right.
it a uniquely broken and large market? You know, I talked about the kids market in India with hopscotch. You know, India's the biggest kids market in the world. And yet, you know, there's no Carter's or no recognizable kids brands in India. There's no Zara kids that's of any size. It's just, you know, Indian parents don't know what to buy, right, for their kids, something quality. And so that was the opportunity for hopscotch. Instacaro in Brazil is another example. You know, Brazil is not the third largest economy in the world, but it is the third largest used car market in the world. And it's, you know, an incredibly painful process if you're trying to sell your used car in Brazil. You're literally spending months, you know, driving to different dealers, and, you know, the paperwork's completely annoying and the process is completely annoying. And Instacaro just kind of solves all that, and they've built a huge business, you know, by solving all that. So, you know, that's market. And then we look at metrics. And so, you know, we're pretty uniquely positioned to meet, you know, thousands of companies every year. And, you know, it's, if we meet an online lender, or just to take a random example, you know, well, we've met, you know, 50 other online lenders in, you know, Brazil and Mexico and Argentina and Nigeria and South Africa and the Middle East and India and Southeast Asia. And so we have a lot of data and a lot of context on, you know, who's doing a good job and who's not. And so we measure their metrics. We pay attention to like who's doing a really good job.
So metrics is one of the M's?
That's one of the M's. Yes, it's management, market, metrics. Then we look at moats. So, you know, being a first mover is great, but being a last mover is actually even better. Right. So
a last mover is better than a first mover?
Oh yeah. Like if you shut the door on future competition, if something about your business model prevents there from being any subsequent movers in your category, because you just shut the door on them because you've built moats around your business. And this is something that, you know, Hal would appreciate. He, like me, is a big Warren Buffett fan. You know, Warren Buffett always talks about moats, and, you know, we talk about moats incessantly at Rise Capital. Like, what are the pieces of this business model that shut the moats on future competition? Right. So just talking about Katopi again, you know, once you lock up these franchising arrangements with all these huge brands, well, guess what? Uber Eats and all these other delivery companies need those brands to be on their platform. And so once you have all those brands, they're not going away. They're not going to switch away from you because they've literally turned over their entire secret sauce to you and supplier agreements and all that sort of stuff. And so, you know, once you have them on board, you have a ton of leverage versus delivery companies, and you can negotiate better prices with suppliers. And it's an awesome moat that you build around this business that is very hard to dislodge.
Right. So I got 4 M's now: management, market, metrics, moats.
Yeah. And then multiple money, you know, at the end of the day,
money.
like, you know, we
money?
gotta generate, you know, we gotta generate big multiples for our LPs.
Oh, okay. Multiples of money.
Yeah. So, you know, obviously you got to pay attention to the entry valuation and what you think this company, a lot of the job of a VC is, you know, you're trying to predict the future, and you're trying to predict the future on not just this company, but this industry. And, you know, and you're never right, you know, but you hope that you're directionally correct. Right. So every financial model you create in the world is always ultimately going to be wrong. And the question is it wrong by 1% or wrong by 100%? And you hope it's much closer to, you know, 1% than 100%. So, you know, you do the math and you try to figure out what you think this company is going to look like over the next 5 to 10 years. And And can you generate a huge multiple off this investment if you're right? And that's, that's kind of the fifth M. So
have you had any, I have to ask this question. Have you had any misses? You had all those successes up here, but what about, you had any misses?
Yeah, we have exactly one write-off in the entire history of Rise Capital.
Wow.
And it accounts for less than 1% of our total invested capital ever. So we're really proud about that because, we've been right, much more frequently than we've been wrong.
Okay.
And the one write-off was actually acquired by Alibaba. So it wasn't that bad of an outcome. We did make some money off of it. It was pennies on the dollar because unfortunately they got into a weird negotiation with Alibaba. But that's the one bad outcome that we've had at Rise. But
Quidsi by any chance?
Sorry?
Was that Quidsi by any chance?
Quidsi? No. So that's the parent of diapers.com. And one of my partners at Rise founded diapers.com. No, that was fantastic. They sold to Amazon for, $600 million.
No, Quidsi, Q-U-I-X-E-Y.
No, we weren't investors in that.
No, okay. What was the one you were talking about? The parent company?
Redmart in Southeast Asia.
Oh, and Redmart.
It's unfortunate timing because this acquisition happened before COVID. Redmart's the largest online grocer in Southeast Asia.
Yeah.
And, before COVID, online grocery was taking off, but with COVID, the business has just exploded now. And so they're doing, like $500 million to $1 billion in annual revenue. It would have been a massive home run if we would have just waited a year or two to sell it. But anyways, what are you going to do? You can't get that, right? So
what's the name of that company again?
Redmart.
Oh, it's Redmart. You were an investor. Okay. And what was the parent company you were talking about? Is that Redmart?
Yeah, that's Redmart. Yeah. So they got acquired by Alibaba. Yeah.
Okay. Interesting. Wow. So what's your biggest lesson learned from all of this? Is there something that ties all this together that you could offer for other VC wannabes or entrepreneur wannabes?
I'd just say, the thing I've learned the most, and I'm still learning. I mean, like you never stop learning, right? It's not like I know everything. But I'd say, the lesson that has been most pertinent to me as an investor is just control the process, control the investment process, right? So you can't always control the outcome. In fact, you can't control the outcome, right? You can try to direct it, but you can control the investment process. You can control the amount of diligence you do, the amount of work you do up front to get to know the team, call the founders' former roommates in college, call their former, work colleagues, like understand who they are as people and like, what are their tics, like call customers of the company, call suppliers, benchmark them, do your analysis, do your homework up front, control your investment process.
I see.
And be disciplined about, what things you invest in and what you don't invest in. And, have a good answer for yourself about the types of deals that you're not going to do, right? So we very early on decided we're just not going to do rocket internet deals. We're just not going to invest in any kind of rocket internet types of startups because they're just fundamentally flawed from a management and, incentive alignment perspective. And you just got to stick to your guns, you just got to be disciplined and not chase, once you start making exceptions to your framework, then everything becomes an exception. And it's hard to stay, disciplined because, there's a lot of shiny objects in the world and it's really easy to get, enamored with a shiny object. But I think that's the most important thing as an investor is, maintaining that investment discipline and, controlling your investment process.
So I know you must have a target of investment size as well. So that helps with the discipline, right?
Yeah. I mean, we know what we're looking for.
Right. You're not going to do like a $100 million deal, right?
No. I left Tiger for that reason is, there's literally thousands of firms that focus on, cutting the, right before you go public check to you,
right.
Give you $100 million, at a $10 billion valuation, and then you go public at 20 in a few years. And that's great. That's fine. No disrespect to those firms, but there's so many of those players in the world, and we at Rise decided to focus on, well, hey, look, let's roll up our sleeves. Let's be like real VCs in these markets. Founders in these markets actually need guidance, and they need help, and they need advice from people who've done it before. And we as entrepreneurs turned investors have actually done this before in these markets and have exits ourselves as entrepreneurs. And so, we can be helpful and we can connect them. We just added, this is not public, but I guess now it is if I'm sharing it here. So Alex Schleifer is the chief design officer of Airbnb. And now that Airbnb is filed to go public, he's left and he's joined us as a venture partner.
Oh, great.
And, being able to, and he's run product at Airbnb, he's run marketing at Airbnb, he's run design at Airbnb. And obviously Airbnb is an incredibly design centric firm. And so he's like literally one of the world's best, user experience and product people. And, has built a big, global business, managing thousands of people. And so, just going through that process, he's gone through that process. He knows how hard it is to build a team and scale a company at hyperspeed, right? As do I, as do my other partners. And so we think that's really important and that's really helpful to founders. So that's the firm that we've decided to be is, a roll up your sleeves VC firm who goes in there, helps founders and helps figure out how you go from a Series A to an IPO or to an exit, because that's something we've done before.
And what's your average investment size then?
Yeah, anywhere from 1 to 10, so we'll, we'll typically, lead or co-lead a Series A or Series B. We have this, pretty cool, network we've built. A lot of our LPs are not only Silicon Valley folks and big families and institutions in the US, but the same in emerging markets, right? So like in the Middle East, the two biggest exits in the entire Middle East history are Careem and Souk. Careem was bought by Uber and Souk was bought by Amazon. And me and my partners did those deals. And, the founders of those firms or the founders of those companies are LPs in Rise. And so, you have this kind of like really cool, like flywheel where, you have big families, influential families and like influential founders and influential institutions in our markets where we focus. Complementing, the LPs that we have in the US and other markets. And this just adds a lot of value because, if we have a portfolio company that's looking to scale into another market or looking to like tap a particular channel, chances are we know the family or that family is an investor in Rise Capital and we can open that door, for you and as a founder. And so that tends to be, pretty appreciated by.
Wow, that's a great strategy, a steady supply of LPs, right?
Yeah, and it's great to bring these LPs alongside us in rounds, and they like to co-invest alongside us, and it's just kind of a win-win-win because
and they know how to do it too. They've already been through it.
Exactly. Yeah.
So they can add value on the strategic side, not just the capital side.
Exactly. Yeah. So
you must not have very much competition, or do you have a lot of competition for these deals in emerging markets? I mean, when you go into Africa, when you go into Brazil, when you go in. I know India is pretty flooded with VC now, but when you go into some of these more emerging markets, do you have any real competition for these deals?
Well, I mean, I guess the way I think about it is, if you look at the amount, this is a new asset class, right? The emergent, like venture capital in Latin America, Africa, Middle East, India, Southeast Asia, it's a new asset class that has just started emerging over the last 5 years. And we've helped it to, we've helped this asset class to become, I guess, more well-known or whatever. But there are other VC firms and they're wonderful people and wonderful firms. And, but there aren't a lot of them, right? And so if you look at Latin America, for example, this is kind of the crazy thing about the markets that we operate in is, Latin America is, most people are familiar with China and sort of the size of China and the VC market in China. So I'll just use that as kind of a compare and contrast.
Right.
Latin America is 45% of China by population, GDP, you name it. It's 45%. It's a half China. Okay. If you add up all of Latin America. And yet in that half China, the number of firms who can lead or co-lead a Series A or Series B, you can count them on two hands. And we're one of the fingers. Rise Capital is one of those fingers. So, there just aren't a lot of firms doing this, right?
Mhm.
Who are, leading rounds and so that makes it interesting. And we obviously have good relationships with these other firms. We look at deals together. We show them deals. They show us deals. And I'd say it's
Sure.
more akin to kind of how Silicon Valley was before all this crazy capital flooded in, like in the,
Yeah.
late 2000s. And so you'd have, deals where there are two co-leads. And back in the day, it wasn't uncommon for, Sequoia and Kleiner to do a deal together. That was fine, right? And but once those firms started raising so much capital and they had to deploy so much capital, it became, well, look, if we let somebody else in, then we can't deploy as much capital as we want to deploy. So it became a little bit sharper elbowed. So we don't really look at it as, competition per se. It's more, collaborators. It takes a village to raise a child. And we're in the early stages of these markets of developing this asset class. So let's partner up and work together and, collaborate on things.
Well, it's more fun than emerge markets, isn't it? Isn't it more fun to deal with like the rise of something, the emergence of something?
I'm super biased, obviously, but I think so.
Well, you've done both, so I mean, you have a comparison.
Yeah, I mean, to me, it's like it's thrilling to know that some of the people who we've backed, some of the entrepreneurs who we are partnering with, are becoming and will become the Jack Ma's and Jeff Bezos's of their respective ecosystems. They are becoming really influential, transformative people, whose not only their businesses have transformed these markets. I mean, just look at what Kareem's done in the Middle East. Like hundreds of thousands of families make their living on Kareem. So not only have the businesses that they've built.
Remind me again what Kareem does.
It's like the Uber-like thing in the Middle East.
Oh,
Uber
I see.
bought them. And, Mudassar, the founder and CEO there, not only did his business Kareem transform, hundreds of thousands of families in that region, but he as an individual is doing things in a personal capacity to try and transform the region. So these entrepreneurs are incredibly talented, smart, driven, passionate, ridiculously ambitious people. And it's just amazing to partner with them and help them get to where they want to go to, because once they get there, they're kind of, they're the Jack Ma or, Jeff Bezos of that ecosystem. And that's really cool, to help enable these amazingly talented people to get to where they're trying to go. So
that was Hal Kelman's question. He wanted to know, what's your nominee for the next Jack Ma from emerging markets?
Oh, I don't know. There's a lot of really, really talented people doing this. It's tough to name just one, and I'm not sure there will be, a Jack Ma, right? Because Jack Ma with Alibaba, this was early enough in the game where he just captured so much of GDP in China, right?
Yeah.
With financial and Taobao and Tmall and all these things all under one umbrella. I think there's going to be, mini Jack Ma's in many of these markets, who are transformative individuals.
Right. Well, with these big companies, the Chinese tech titans coming into Southeast Asia and other markets, are they crowding out some of these startups that you invest in?
No, on the contrary, they're great exit partners.
Uh-huh.
So I mean, there's this sort of maybe getting geopolitical here for a second. Like, the world has, I think we hit peak globalization probably 5 or maybe even 10 years ago. And since then, the world has been getting a lot more nationalistic in many ways. And there is kind of a battle going on between, Silicon Valley or, US tech companies and Chinese tech companies.
Sure.
Trying to buy up, the best assets in other markets. And so, typically the way that manifests itself for our companies is these are exit partners.
Yeah, I see you've sold some to Amazon and sold some to Alibaba.
Totally. Yeah. So, I mean, it's there, and there's going to be more of that going forward as those players, we've all seen the market caps of those companies go up, and, they have a lot more ammunition to deploy to acquire assets that they find are attractive in these markets.
Well, do
And
you have companies in these emerging markets that have gotten into such diversified sectors like Alibaba has and like Amazon has, that they've been able to spring out into many other fields like logistics and finance and
oh yeah, yeah. I mean, so
what's an
GoCata is a great
example of that?
example. Yeah, GoCata is a great example. Quesky is
Okay.
another example. So I'll just give GoCata. So GoCata
Okay.
started with ride hailing, delivering people from point A to point B. And
Mhm.
then they started delivering things from point A to point B. And then they started dividing up that delivery business into food delivery and then e-commerce delivery and so on and so forth. And then they
Yeah.
started saying, well, why don't we offer all those things on our platform? And so now we're an e-commerce company. And now why don't we offer financial services to the people and things and merchants who are using our platform? And so, you start to become a financial services company. And so, you become a kind of an everything company, over time, right? And this is what Gojek's done in Southeast Asia. Obviously, great business there. Not an investor, probably one of my biggest misses ever, unfortunately, for that. Nadim's an amazing entrepreneur and he's built a great business there. But yeah,
Ride sharing and scooters, right?
yeah,
And delivery.
It's
right?
basically everything. Yeah. So I mean, they basically did exactly what I just described. Is you start with one thing and you start utilizing the thing that you built to expand into other verticals, and they've done that phenomenally well. And I think they just announced they're merging with Grab too. So that's a massive merger between two double-digit billion-dollar privately held companies, and that combined business is going to be one of the most valuable. Once they go public, one of the most valuable publicly traded internet companies in the world.
Yeah, I saw that. I saw that news today. So which of these emerging markets, and I do note that you really have only, I saw YY on your list of deals, and YY is China originated, but it's the only one that you had listed there that's China originated. Are you avoiding China?
Yeah, we are. China. I mean, China's not an emerging market. It's emerged,
Okay,
and so
it was, it used to be.
it used to be 10 years ago, 15 years ago, but yeah, China's emerged, and it's as robust and amazing an ecosystem as Silicon Valley. And no disrespect to Silicon Valley, Silicon Valley is
Yeah.
always going to be one of the most important hubs for innovation globally, but it is impossible to argue now that it is the only one. China has definitely become, and in some ways exceeded Silicon Valley in certain verticals, AI and things like that. It's become an amazing innovation hub. And there are more innovation hubs popping up around the world, Sao Paulo and Mumbai and, others. And so, yeah, but we don't invest in China. It's not an active, investment market for us. We focus on this next wave of markets,
Okay.
that we talked
Okay.
about earlier.
Well, so what's the biggest risk that you encounter in investing in these emerging companies in emerging markets? You have two risks in one.
Yeah, I mean, that's one way to look at it. We personally don't look at it that way. The way we look at it is, you have extra tailwinds, right? Because
Okay.
we're investing in the fastest growing economies in the world, and we're
Right.
investing in the fastest growing sector of those economies, which is the internet sector.
Right.
And we're investing in the fastest growing companies in that sector. They're the market share leaders and market share takers. And so you have this sort of triple
Right.
growth thing going on here. And
Right.
and that train ain't slowing down. You know what I mean? So
Right.
if you kind of roll the clock forward 10 years, it's impossible to escape the conclusion that there's going to be trillions of dollars of market cap created from our markets in internet market cap over the next 10 years. It's impossible. It's literally impossible for that not to happen. So the real risk that we are navigating is not betting on the right horses, or just being too not taking enough risk. Honestly, that's the thing
Oh,
that
really?
we struggle with. Yeah, that's the thing that we struggle with internally at Rise is, are we taking enough risk? Because we have this amazing team, and it's very clear that they know what they're doing, and they haven't generated enough sort of financial proof that their business is going to work. They've got great user numbers or whatever, and we typically say no at that stage. We typically wait until there's financial proof. until they're generating millions of dollars of revenues and it's clear that they've got a really good business.
They don't have to be profitable, right?
They don't have to be profitable. In our markets, you know, usually they're pretty close or they are profitable by the time we invest, just because in our markets, there isn't as much capital. So the entrepreneurs are much more bootstrappy. And so they build, you know, very lean businesses. And to the extent they're losing money, it's typically on the order of, you know, 50 or $100,000 a month, which is like nothing compared to Silicon Valley startups.
Right.
So, you know, they tend to be very lean.
And the burn rate is a lot less too, right?
Way less.
Yeah.
Way less. And so, you know, the conversation we have the most between me and my partners at Rise Capital is, are we taking enough risk? Because there are some companies where the team is just so good. You know, these guys and girls, if they were to start this company in Silicon Valley, they'd raise $10 million in 2 minutes. And, you know, their user traction is fantastic and they just haven't monetized it enough. Should we just be a little bit more risk on and just take the bet? And so, you know, because if we don't take the bet, will we miss out? Will we be able to be there for Series B or whatever the case may be?
Right.
And,
so what usual equity stake do you take?
Yeah, I mean, we're active investors. You can't be an investor in emerging markets and be a passive investor.
I see.
There's literally no such thing as a successful passive investor in emerging markets. It does not exist.
Okay, so let's say at least 25%?
No, it's you know, anywhere from 5 to 25%.
5 to 25%.
Yeah, we will take a board seat or a board observer seat. We will be involved in the conversation and be involved in helping to steer the company, and that's important. And you know, so that's really critical.
Have you ever had to replace a CEO?
Yes.
Tell us about that.
Yes. So it's a really tough thing to do. You know, on one occasion, the founder CEO got a brain tumor, and this really affected his emotional and you know, physical well-being. Yeah. And poor guy was just unable to like actually do the job. You can't blame him. He's dealing with a brain tumor, and so. Yeah. You know, so we did have to remove him and bring in a new CEO in that case. You know, we have had to replace a CEO for just, you know, kind of, you know, grossly ineffective management. You know, but you know,
like overspending is grossly ineffective management. Mean overspending, overexpanding, no discipline. What does that mean?
No, I mean, like, you know, everybody's going to make mistakes, right? Like startups don't go like this. They typically go like this, right? And they, you know, hopefully end up there, right? But there's a lot of loop-to-loops in between, and, you know, a lot of adjusting and iteration and all that. So that stuff's normal, you know? But the thing that is kind of not normal, which was the case in this situation, was just really poor management and really poor treatment of employees and really poor team building and really toxic culture. And, you know, if you're, you know, not everybody's cut out to be a CEO. You know, it's a really hard job. And, you know, and I'll just sort of explain that in a second here, because, you know, when you're dealing with 30 or 50 employees, right, as human beings, we can manage that number of relationships, right? We can keep track of, oh, hey, there's Sarah and there's Tim and there's John, and I know John's wife and I know Sarah's dog's name, and I know that Tim is working on this, and you can keep track of 30, 40, 50 people that way, right? The hard part about being a startup CEO is once you start to scale beyond that number, which if you're doing well, you do scale beyond that number, and you get to 100 employees or 150 or 200 or 300 or 400 or 500 or 1,000 or whatever the case may be, you don't know people in your company. They all know you. You get in the elevator and they're like, oh, hey, Nazar. And you're like, hey, who are you? And, you know, and you have to start building processes, and you have to start building linkages in order to make the whole thing work. And by linkages, I mean, you know, you start off with like a vision and a mission of what you're trying to accomplish, and that evolves over time, but it largely stays the same. You know, what is the company we want to be, right? What is the thing that we're trying to do in this market? And, you know, to go from vision and mission to strategy, to tactics, to like, you know, KPIs, to financial results is really easy to keep that line intact when you're dealing with 30 or 50 employees. When you're dealing with 500,
Right.
it's unbelievably hard because, how do you make sure that everybody wakes up in the morning and knows and remembers what it is, what the big picture of what you're trying to do, and how that translates into your strategy, and how that translates into your tactics, and how that translates into KPIs and people responsible for those KPIs, and then financial results, which are a lagging indicator. Financial results, they happen after the fact. Like if you don't get all that other stuff right, then you find out a few months later your financial results suck, not reversed, right? And so, if you have a CEO who is just not capable of dealing with people in that way and abstracting themselves and leading, and the way that they lead creates toxicity and, broken relationships and frustrated employees and all that good stuff. That's really hard. That's really, really hard to deal with. And, fortunately it doesn't happen, very often because most people, learn and evolve and whatever, but every once in a while, there's they really just can't do it. And you got to make a tough decision.
Yeah, no, the most successful founders I've seen are those that bring in others around them to help build out the C-suite. You take care of this, finance, you take care of HR, you take care of communication, the vision, and the CEO, founder, his most important role or her most important role is communicating that vision to everyone and making sure everyone stays on track. And, I've just seen that work with many of these Chinese companies that bulked up. Like Jack Ma, I think, one of his great skills was just bringing in these other people who could complement him and supplement him, add a lot of value that he couldn't bring himself. And, he had people from Goldman Sachs on his team, and from New York City on his team in China. And that made a big difference.
Yeah, totally. You've got to be, you've got to be willing to be not the smartest person in the room,
right?
And surround yourself with people who are better than you at all the different things that you're, not as good at. And nobody's good at everything, but it's really hard to recognize, what you're good at and what you're not good at. And very brave people are able to, add people who can complement them. And not everybody can do that. It's a really hard job. And so we spend a lot of time before we invest in a company trying to get to know, the founders and like who's running this thing and, their temperament and how do they deal with people and what are their tics and like, what are their magical qualities? Like, can they sort of, everybody would talk about Steve Jobs' reality distortion field and all that sort of stuff. And nobody's like Steve Jobs, but, what are the things that they can do to really kind of, engender confidence and, belief in what they're trying to do? Because at the end of the day, what these founders are trying to do is crazy to some extent. It's crazy, and the math supports this, right? So what I mean by crazy is if you try to take something from, $1 in revenues to $100 in revenues, well, that's hard. It's, mathematically 100 hard. A unit of 100 hard, right? It's 100 divided by 1, right? But if you're trying to take something from 0 to 1, it's mathematically infinity. Like 1 divided by 0 is infinity. So it is infinitely harder to start something, to start a business and to start it from scratch and convince people to join you and get customers and convince people to pay you and then build it into like, it's crazy. You have to be a little crazy to try to do something like that. And, so we really enjoy, trying to partner with these crazy, ambitious people in these markets, building these, enormous companies. It's thrilling. So.
Oh yeah, that's why I like to write about them. It's thrilling to hear their stories. It is wild. They're real mavericks. But in a way, you are too as a VC because you're right there with them, taking those risks. So I want to ask you, with COVID now, it must be a lot more difficult to do due diligence on these potential investments. So how are you managing that?
Yeah, thankfully we are located in all the places where we do business.
Okay.
So, arranging, I am certainly not getting on planes and, flying around as much as I was before. But fortunately, I don't have to for these purposes because I have partners and team members in all the cities and all the locations where we invest. And so, it's quite easy for them to meet the management teams.
I see.
For me to Zoom call them and, validate things, but, the in-person meetings are happening with our local, with my local colleagues in each of these markets. And so that's great,
All right. And so they call up the customers, they call up their best friends, they call up their wives or their husbands.
Yeah.
What is it like? You
Yeah.
ever
No,
take them out to dinner, go to their house,
it's really helpful to get, as much context on people as possible.
Yeah.
Before you get married to them. And literally, we're getting married to founders, right? We're in this, we're not, it's not like, hey, here's a check and then see you at the IPO.
Right. Right.
Here's a check and we're going to be working together, talking about this business for a long, long time,
Right.
longer than most marriages last, right? So
Sure, at least, about 10 years, maybe, or maybe shorter than that at the exit, right? Or
yeah,
maybe
5 to 10 years.
acquisition. Yes. So, Hal Kelman asked a great question here about political risk. And so, what about political risk?
Let's see. Invest in a company, Crimea, Ukraine.
Yeah. So you've done Russian deals, Brazil.
Yeah.
Yeah.
Yeah. I mean, look, I can't really comment on, invasions. That's not political risk, Hal. That's military risk. I mean,
Well,
look, hopefully
they're related.
Yeah, I mean, hopefully Brazil doesn't get invaded, or Mexico doesn't get invaded, or whatever. But look, political risk is real. These governments, the world is becoming much more nationalistic, right?
Yeah.
So governments are caring a lot more about the internet stuff that is happening within their borders. This tends to help us because sovereign wealth funds from the countries where we invest tend to be LPs of Rise Capital, and they see us as the good guys because we're helping their local companies get big. We're not helping Amazon come to Brazil. We're helping, Brazilian companies become big internet companies, or whatever the case may be. So, so it tends to cut in our favor. I'd say, to the extent that governments pay attention to what's going on in the internet, in these markets. But you got to play by the rules, and you've got to be conscious of the fact that you've got to store data the right way. You've got to respond to questions the right way. You need to just do things the right way and abide by the law in any of these countries. So, that's definitely reality.
Yeah. How many times have you encountered this?
Well, I mean, look, when I was a CEO of what was the largest social network in Russia and Eastern Europe, and Vladimir Putin and Dmitry Medvedev had profile pages on this social network, and so I assure you, the Russian KGB was coming to our office periodically, and hey, there's a commentary on this and this. Do you mind, pulling that down? Well, okay, yes, sir, no problem. We'll pull it down. We're not here to, rock the boat. And YY is a social platform in China where tens of thousands of people get together virtually online at the same time. And if you're the Chinese government, that's something worth keeping an eye on. And so there's a government liaison function at YY to communicate with China. So, I've lived through, and I was on the board of that company, and I've lived through dealing with, political situations in China and Russia. And I can assure you that that's about as extreme as it gets. That is not what is happening in, India or Mexico or Indonesia. But you do have to follow the rules and be a partner to these local governments and help them accomplish their objectives. And candidly, their objectives are pretty simple. It's, these markets have, pretty low per capita GDPs and, employment problems. And so they want to make sure, first and foremost, that your company is helping them solve that, right? So help them create a driver of employment. Don't go and, invest in a company and then put their tech development office half the world away. Like, try to bring and employ, engineers in the country and, do those things to help, drive these economies. Because candidly, if you're sitting in any of these markets, they're all looking at China. All of them are looking at China and saying, I want to be kind of like that. China's got, Alibaba and, Tencent. I want that. Like, that's cool. That has, helped drive employment and GDP creation massively for China. 20% of China's GDP is internet companies. And, those are companies that, these are companies that didn't exist 15 years ago for the most part. So in 15 years, China has created 20% of its GDP from the internet sector. If you're in, Egypt and, India and, they're looking at that and they want that to happen for their market too. So they want partners like us to invest in local companies and help them do that. Right. So that's ultimately what they're after.
They're not looking so much to the US, they're looking at China because these Chinese companies came on so strong in such a short period of time.
Yeah, I'd say they're definitely looking at, not politically being like China, but certainly from a internet sector policy perspective, being like China. Let's make it hard for US players and foreign players to and you see this in India, like new e-commerce regulations over the last few years, like, hey, you can't have, foreign owned retailers and e-commerce players in India. And, policies like that to protect the local ecosystem and help the flip parts of the world become big companies, or the geos, whatever this may be.
Yeah. So TikTok's banned in India. So Ahmad has some great questions here. He wanted to know, he has some questions that for young VCs out there, what would you recommend for them? And what would the current Nazar say to a young Nazar, a very young Nazar? I know you're very young already, but so extra young Nazar.
Yeah, I got to tell you, I feel like a pretty young person, but I'm like an old gray hair in emerging markets. It's like very.
Oh, you're about 30, right? Are you 30 yet?
No, come on, you're too kind. Are you kidding me? You're gonna make me blush. No, I'm definitely not in my 30s. I'm 43. But thank you for suggesting that I could pass for somebody who's close to 30. I'm gonna tell my wife that, and she's gonna tell me I'm dreaming. Anyways, what would, for young people who are trying to get into VC, how did you learn before making your first investment, and when did you know it was time? I think it's incredibly important to have operating experience. There's just no way, in my opinion, you can be a successful VC without having run or been an executive at a successful company yourself. And I just don't think it's possible, because unless you see what success looks like on the inside of a company, and unless you have lived through the pain of doing that yourself, it's really, really, really hard to walk into a room with founders and understand if they're full of it or if they know what they're talking about, and to meet the team and understand if they know what they're talking about and see if they kind of have what it takes. I think that's really, really hard. And so, any young person who's looking at getting into VC, I'd recommend you do two things. Number one is definitely, acquire the requisite financial knowledge of how businesses work and, be able to read financial statements. This is not rocket science. You don't need to get an MBA. You don't need to get a CFA. Just understand how businesses work. Okay. So, revenues, and then there are costs of selling things, right? So if you're making a widget, what is the cost of the materials that went into the widget? And then you get your gross profit. And then if you're acquiring a customer, how much did it cost to acquire the customer? And, basic unit economic stuff. And how does this flow through to working capital and cash flow? Just understand that. Like, how do you get from selling something to cash flow? And, if you understand that basic financial math, and you understand and you have a sense of kind of value creation. So, okay, if I buy 10% of a company that's worth $1 and I help them become worth $10, and my 10 cents has become $1, and I've 10x my money, that's nice, right? And so having that sense of value creation, just basic financial investment know-how is good. And then the second, however you acquire that, right? Either you work at a bank, or you go take some economics or business classes or whatever the case may be, or start your own company or whatever the case may be. And then, get some operating experience. Join a successful startup or start one of your own. If you got, the idea and all that good stuff, network and capital and whatever. But join a good startup at whatever stage. If you're trying to, if you're getting on board a rocket ship, don't ask, what seat do I get? Just get on the damn rocket ship. Just join a good startup and see what success looks like from the inside of a good company in this space. And if you do those two things, then you can come out of that. And maybe that's, 2 years this, 2 years that. And so you spent 4 years getting that education after college or whatever the case may be. And then you're pretty prepared to go into VC, and you're pretty prepared to meet entrepreneurs and ask the right questions and to know what you don't know, right? And, to evaluate the company and, have some sense of, okay, are they making money on stuff? Are they not? When will they make money on stuff? And, if I invest at this level, and they keep growing like this, what kind of money will I make in a few years? That kind of stuff, you can't just you can't just spreadsheet your way through this stuff. You can't just kind of McKinsey your way through this stuff. You have to do it, And
then you also have to be a good judge of people, don't you? I mean, that's part of it, right? That's part of the whole magic of it, to be a good judge of people.
Yeah, it's a people business. You got to be able to get along with people. You got to be able to be, hard on people too. Sometimes if you're a VC, right? So I'm not always a nice guy. In fact, I'm frequently like, the bad guy in the room who's, telling people what they don't want to hear. And that doesn't make me popular, but it does make me valued to these companies. Sure. And they appreciate it, and they recommend me to other entrepreneurs in spite of the fact that, we might be arguing a lot of the time because, I'm telling them, no, that's not right. Like, think about this. But that's my job. It's my job to push back. It's my job to, make sure that, people are thinking through things as much as possible. Right. And poking assumptions and things like that. So,
that's great.
Yeah. Hopefully that's helpful.
Yeah, no, that was a great answer. What percentage of your deals do you do both the A and the B round, the first and the second round? How many of them go to the second round?
Yeah. So in our markets, if you're leading an A or co-leading an A, you need to prepare yourself to be there for the B too, because when you look around, there aren't that many investors who are looking to lead a $10 million round or $15 million round in these markets. It's once you get to Series C, that's when everybody and their mother comes knocking on the door, because by that point in time, you hopefully have a 50 or 100 or $150 million business in terms of, revenues.
Yeah.
And, thank you. I'm glad that was helpful, Ahmed. And please feel free to follow up if you have follow-up questions. So Series A and Series B, there's a gap. There's a capital gap in these markets for the most part. And so you need to be prepared to be there and to support the company. So typically when we do an A, for every dollar we put into the A, we'll reserve $2 for the B. That's typically what we do. And we do that automatically, so almost no questions asked, like, we're going to be there to support you for the B. You just kind of have to do that in our markets.
Okay. Well, so Ahmed, I'm glad you got your question answered so well. Let's move on. Let's see what other questions we have here. The ones I didn't ask yet, the attendees didn't ask yet. Okay. Let's see. Here they are. What did Goldman Sachs teach you?
Okay.
Most of these we covered, but what did Goldman Sachs teach you?
Goldman was an amazing place. I know they get a bad rap in the press, and it's just oh, the rich, crazy people at Goldman. It's not like that at all. People at Goldman are super, super nice, super, just thoughtful and smart and interesting and just cool. Some of my best friends are friends from my Goldman days, and more than anything, Goldman taught me, I'd say, to think very long term You know,
Okay.
so there's a saying at Goldman: be long-term greedy. You know,
I
don't be
see.
short-term greedy. Be long-term. Be greedy. Be long-term greedy. You know,
I see.
try to get market share in things that are like, you know, worthwhile and long-term. And like
I see.
this comes up all the time with portfolio companies. Is like, you know, founders or maybe other investors will get hung up on, hey, look, you know, this investor, it's a great investor, but you know, we really want them to come in at like a 50 million pre, and they want to come in at 45, and like, you know, we need to get them to 50, otherwise we're just gonna have to say no. And it's like, no, dude, like they're a great investor. They're gonna put in tons of money. It's gonna be fantastic. You're gonna be on the front page of whatever, and you're gonna have so much capital and so much support. You're gonna get them in at 45. Give them a good deal. Give them a good deal. And yeah, we get diluted a little bit more, and we don't own as much.
Wow.
But who cares? You know, I'd much rather own like a small piece of something big than a big piece of something small.
Yeah.
You know, so you know, being long-term greedy was like a really big takeaway from Goldman.
Yeah.
I'd say the other thing was, you know, just really try to be like excellent. You know, just try to do everything the right way. You know, try to surround yourself with like excellent people. You know, spend those extra 5 minutes like polishing something up and making it like really good. Just like try to be like excellent. You know, there's just like a real culture of like do stuff really well there that it just really sticks with you. The unfortunate other thing I learned at Goldman, this is probably the one unfortunate thing I learned there, is I eat so quickly, you know, like because you're so busy at Goldman, like you just literally like shovel food into your mouth. And so I'll sit down for dinner with my family and I'll be done before they've even started, you know? So I eat like really quickly. And I definitely learned that at Goldman too, unfortunately.
I see. I see. Well, what about at Tiger Global? Was it that intense at Tiger, or more intense at Tiger?
Also super intense, like in a different way, you know, whereas Goldman, like you're working with like lots of teams, right? There's like lots of people you interact with.
Yeah.
At Tiger, it's much more about like, hey, you're on board, you're a partner here, like go do your thing.
I
You
see.
know, let me know what you find.
I
You know,
see.
I'll be in India, you go to China, and we'll talk like in 2 weeks, and let's see if we find some good deals to do. And you're
Oh,
like,
cool.
all right, cool. And so, you
Yeah.
know, it was a lot of, you know, independence, which I really valued. It was great. You get to do your own stuff and just
Right.
build your own theses and like execute
Yeah.
against them. And that was awesome.
Wow.
And then the other thing, you know, there that was really a big takeaway for me is just kind of the value of global perspective.
Okay.
Is, you know, the value of, you know, understanding, okay, here's where things are in Brazil in this particular sector, and here's where things are in India, and here's where things are in Africa.
Okay.
And here's the numbers around things, and how do we kind of benchmark and understand like A, what's going to happen next, and B, like who's doing a good job, right? So the value of like global perspective.
Right.
And from Goldman, you know, that too, but at Tiger, that was a really important thing, was just kind of like, you know, let's get a global perspective on this. So, oh, great, we found this amazing company in India or whatever the case may be. Let's go find as many of these as we possibly can around the world, and you know, see who's doing a good job. And you know, is anybody else good? Are these guys good? Do we think they're as good as we thought they were? And you know, let's just kind of try to really, you know, get a good global perspective on something.
So what are those business models today that you think are the ones that will take off globally, that you've seen in emerging markets that you think, well, this could play out in another emerging market? You know, what we've gone through, ride sharing, delivery, you know, these kinds of things. Is there anything new out there?
I mean, there's tons of new stuff. So, I mean, and it's, I guess it's unfair to sort of, you know, completely bucket emerging markets all together, just because there are nuances around what works in one versus in another.
Yeah.
So I'll give you this example of Gokata we talked about earlier. Yeah, it's, you know, in the sort of Gojeki kind of world, you know, ride hailing and delivery and all sorts of stuff like that. But their business model is completely different. And they've been able to become a cash. I mean, this is a company that's growing 10% per week, not per month, per week. They're growing 10% per week. So hyper growth company, you know, cash flow positive, right? They don't need more cash at this stage. We'll probably raise more money just to kind of accelerate things, but they don't need more cash. And, and their business model is really unique. And so what they realized is, hey, you know what, in Africa, things are a little bit different than they are in Southeast Asia or in India. And, while in Africa, there's a situation as well where people don't use cars as much because cars are very expensive for the average, African consumer. It's expensive to buy a $10,000 car or whatever the case may be. And the roads suck. So people don't use cars, they use motorcycles. And so there's motorcycle taxis and motorcycle everything in Africa. But even more than that, there's the issue of, well, even motorcycles and safety equipment and proper smartphones and Bluetooth connected helmets so people aren't riding on their motorcycles and looking at their smartphone, and insurance and all these other things, these are pretty expensive too. So if you want proper drivers and a proper experience, you can't do it the way that Gojek did it. You have to do it a different way. And so what's the way that we do it is, well, we basically have a subscription business where we give the drivers a business in a box. And we say, here's your brand new motorbike and Department of Transportation certified helmet with Bluetooth and a smartphone and insurance and bag and equipment and shirt and all sorts of stuff like that. It's a business in a box. And you pay the company a daily subscription fee to subscribe to this business. And after 2 years, all of that stuff is yours. You've paid it all off. It's all yours as a driver. It's your own business. And if you miss payments for 3 days, well, guess what? We have trackers on everything. We'll just come we'll take your business away if you don't, pay to subscribe to this. And it's a great deal for drivers because they get to make 3 times the income that the average Nigerian makes as a driver at Gokada. So, they are making really good money in Nigeria. And it's great for consumers and great for everybody. And they feel like business owners, and it's like a driver of entrepreneurship in the country. And so, people love it. People love the business and they love, how they treat customers, and every driver feels like it's their business. And so they want to treat customers the right way. And it's awesome, like that, that kind of model. And so you see a lot of this, business model innovation happening in emerging markets where all these local nuances create a new way of doing things that's actually better than the original way, right? Mm-hmm. So Gokada became cash flow positive before Uber did. And Uber's been at it, a really, really long time. So, it's interesting. It's super fascinating to see all these, different permutations.
Yeah, that business model is really sounds great. I mean, do we have anything like that in the US?
Not that I'm aware of. Not that I'm aware of.
Yeah, well, that's the beauty of emerging markets. Okay, folks, it's time for our poll. We're going to have a little bit of a break here. Time for our poll. Okay. Yeah, we'll get to your question in a second. Our poll. Everyone is participating in the poll. Just mark your answers. And this is all anonymous. Don't worry about anything going anywhere else. Which emerging market has the most potential for tech innovation? Okay, make your choice.
Where, sorry, Rebecca, where?
You can't, oh, I'm sorry, you can't see it. Launch polling. There we go.
Oh, there we go, okay.
Okay, which emerging market outside China has the most potential for tech innovation? So you can answer your answer here. And then the second one, there's quite a few questions here, so please weigh in. What's your outlook in the new year, 2021, for your career? Upbeat, discouraged, neutral, hopeless. Part of the fun of putting these questions together is coming up with the multiple choice answers. Are you planning to move in 2021, or did you move in 2020 in this new normal? Where would you put your money? And there's 3 markets here that are listed. Actually, these are fairly developed markets. Well, they are very developed markets in the case of the US. Oh, good, people are weighing in. Would you invest in a Chinese tech titan today? So I guess this is more of a stock market question. This is more of a stock market question. All right, then we get to have a little bit of fun here. Do you think that President Trump, if he runs again, will get reelected? All right. What change can we expect in US-China relations in a Biden administration? Oh, thanks everyone for weighing in. Okay, and the last one, will you get the vaccine? Okay, let's see what, all right, we're going to take a picture of the answers. So has everyone voted? Has everyone voted that wants to vote? Okay, thank you very much. Let's see what we have here. Well, India came out as the #1 emerging market. Most people are pretty upbeat for next year. No one is hopeless. Are you planning to move? Several have moved. This is rather mixed. Maybe wins out on are you planning to move? You know, I know several people who are have moved or are in the process of moving. Where would you put your money? U.S., China? Well, this is really almost split. Russia has 0. U.S. This probably should have just had U.S. China, but China has a slight edge. I mean, U.S. has a slight edge. Would you invest in a Chinese tech titan today? That's actually kind of surprisingly high, but 64% said yes. Okay, and will Trump get reelected if he runs again? Most people say no. Okay, what change do you expect in the Biden administration for U.S.-China relations? A softer approach has won out here. And will you get the vaccine? That is almost, that's very high, yes. That's a very high yes. Okay, that's very good. Thank you, everyone. That was fun. I hope you all had fun with that. Okay, today also we're going to do something else. That's the end of, oh, share results. Share results. Okay, share results.
Oh, there we go.
Yeah, everybody got the results?
Yep.
Okay, good.
Oh,
now,
very upbeat. 91% upbeat. That's great.
Really, yeah, that's really, that's great. That is great. I guess by mid next year, we'll be really over the moon. Okay, stop share result. Okay, now there's another one I have here. Let's see if I can get to that. Maybe I can only do one poll at a time, but I have a quiz here. So let me just do the quiz out loud. Okay, the quiz is when was ByteDance, the maker of TikTok? And you have to get all 3 of these answers right. So now I'm going to, can everybody kind of turn on their screen so I can see what your response is? Or you can put it into the chat. So when did ByteDance, when was it originally founded? And where was the founder from? So you just type in your answer here if you think you know. If you think you know the answer, just type it in. If you don't think you know the answer, just don't say anything. Okay. And when did ByteDance become a unicorn? Okay. Yeah, 2012 is right on the when ByteDance started. That's true. Beijing is not correct. 2009. Nazar, what's that in reference to?
I thought he originally started it at the end of the global financial crisis, but maybe I'm wrong. Maybe I'm remembering something.
I think, well, he did another startup before ByteDance.
Okay, maybe that's what I was thinking of.
Yeah. So, but he started in 2012. It became a unicorn in 2018, and he's actually grew up around. Oh yes, thank you. Yes, thank you for sharing his name. And 2019, 2009 from China, 2017. Okay. These are all pretty close. But as I said, I just think I just gave the answer. Now there's one real trick question. I know no one got all three of those answers right. So you have to get all three. And if you get all three, you get a prize, which is a book. I've got a selection of books. Oops, I can't show that one. This one, I've got this one. I've got this one. Can you see it out of the Gobi? I've got a few others. Startup Asia. I've got Kai-Fu Lee's book. I showed that. I showed Kai-Fu Lee's book. I showed Out of the Gobi. I showed Tech Titans, right? Tech Titans. These are some of the prizes. But if you get the next one right, you get a different book. So which author is going to be presenting at our next show, our next event, which is going to be at CES, Consumer Electronics Show, which is usually in Vegas, and I always go. We always have an event there in Vegas, which is great fun. But this year we got to go virtual. So we're still having it. It's just going to be virtual. And we are going to have an author speak there. And if anyone can guess who that author is without looking it up, no cheating. John Chambers is close, but we have John Chambers January 21st. He's not going to be in the CES show. Okay, all right, you guys. So here's the surprise. This author, if you can see, Trampled by Unicorns. It's a new book out. Very good. I'm about halfway through. Trampled by Unicorns, Maëlle Gavet. She was CEO or COO of Compass, the real estate company, and she'd also worked at Priceline. She's also worked in Russia. She's worked in emerging markets, quite a background. And this is her first book. So anyhow, you'll have another chance to win this one if you keep participating in our shows. All right, thank you, everyone. Now I need to go on to share screen.
Are we doing this?
Yeah, we're going to the real surprise thing. Actually, let me just announce our Silicon Dragon CES 2021, January 13th, 4 to 6 p.m. This is how you sign up, SDCES 2021. And it's going to be great. And then after that, we've got John Chambers, January 21st, 4 p.m. You know, John Chambers he's basically stepped down from Cisco to become a venture capitalist. And, you know, he's invested in some really interesting markets, and we're going to get to hear from him. That's going to be great. And then right after John Chambers, we have Brad Smith of Intuit. So these two are kind of aligned. And then, well, actually, if everyone would just become a Silicon Dragon Circle member, you could have the full year next year, all of these events, plus the ones that I just said. And all you have to do is go to silicondragonventures.com and sign up. And where is our networking and toast? I got to get to the slide of networking and toast. Okay. Now, we do have a special surprise here. We've done our poll, we've had our questions, we've had our great fireside chat with Nazar. And we're doing a little bit of networking and toast and song. So now I'm going to stop share, and Nazar is going to start share on his side. And this is something that I found out about Nazar, and he can tell us a little bit about it after we hear this song. Okay?
You sure you want to do this?
Yeah, go ahead, Nazar. Actually, yeah, definitely. Yeah, you see what I did? I gave you the thumbs up.
All right. Should I just start playing it, or do you want to tell people what this is all about?
All right. So I found, yeah. So, yes, they say yes, play. So I found out that, so usually what I ask when I do the prep on these shows is I ask VCs what their special interests are. Well, in this case, I actually got this wonderful surprise that Nazar is a songwriter, and And he's not, he's not just playing around. He's actually has some songs out there, and it's really cool. And actually, I wanted him to play a little, a little segment of his song. He writes them, records them, he does the videos with them. And so, Nazar, if I missed something there, you can add on to whatever I missed.
No, I guess I'm a little embarrassed, but yeah. So I love writing songs and writing music. So I put stuff on Spotify and YouTube and just kind of release it into the world. And this song that that I'm gonna play is it's about climate change. So the song is about how if we kind of all do our part, we can help the world come alive again. And the name of the song is called "Come Alive." So I'll play the music video. Feel free to find me on Spotify or on YouTube if you care to torture your ears or eyes.
Well, how do we find you on Spotify and YouTube? Do we look for your name, or how do we find you?
Nazar. Yeah, just Nazar. I think there's a couple of Nazars, but I think I might have the most plays or listeners out of the other Nazars out there. I don't know. But
okay. Well, how long have you been doing this?
I've been a music. I used to be in college. Everybody was in a rock band, right? And so I was in a rock band in college, and we got played on the radio and toured around a bit. And then I just sort of, I just sort of put it down for a number of years. And I've always been songwriting over the years. But COVID's been interesting because since I haven't been on planes, 20 hours a week basically,
Sure.
It's given me a little bit of time to do. This is kind of, some people golf. This is kind of my thing. This is my golfing is. I just kind of write songs and record them. So it's given me some time to do that, which has been cool.
Oh, very cool.
I started putting this stuff out this year, actually, just over the last few months, and it's been fun.
Very good. Well, let's hear.
All right, here we go. So I'm just gonna play a little bit from. I'm not gonna play the whole song, but I'll play a little bit from the music video. Come Alive. So hold on, let me tee it up. Here we go. All right, so this is on YouTube. Can you guys see my screen?
Yeah.
All right. Hopefully you can hear the song too. Let's see how that audio quality goes. All right.
Reasons, a million reasons why it's easy to not believe when we don't even try.
All right.
Wow.
All right.
That was great. That was great.
Yeah.
So everybody, show your reaction. Come on.
Fine. But anyways, that was fun.
That was fun. So, well, look, I hope that everyone are some of these from Marco Polo. How common?
Oh no, they're not. These are independent. These songs and videos and video clips are independent.
Okay. So I guess we do still have one more serious question here about the super app business and the model opportunities that are most relevant in emerging markets. I think we talked a little bit about that, the super app type opportunities still available in developed markets.
Yeah, I don't think there are many super app opportunities in developed markets. Just because if you look at the amount of capital that is going into the startup ecosystems in these markets, every single player in every single vertical is extremely well funded. And, there's just so much competition because of all the capital. So just to put numbers around this, right? If you look at the $250 billion in venture funding that goes into startups every year, 165 of that is basically the US and Europe. And then 75 of that is China. And then there's only about 10 for everything else, right? So the US and China ecosystems are extraordinarily well funded. And so it's hard to imagine that somebody gets enough capital to be able to fend off all those other aspiring, would-be super apps and create, a super app. But in other markets, and clearly Geo is trying to do this in India, right? And they $20 billion to do it. So, there are opportunities to do this in markets like India, in Southeast Asia. Grab and Gojek together, that is a super app. We're obviously trying to do that with Gokada in Africa and in other markets in Latin America. There's other aspirational players doing that as well. So I think in emerging markets, you will see super app types of businesses emerge, but in developed markets, probably not.
Okay, good answer. Well, let's give Nazar a round of applause for all of his great answers and all of the great questions as well. And, we have one more fun thing to do, which is our toast. And we always give a toast to our speaker. And so would everyone please join me? You can turn on your camera if you want to, on your video, if you want to join the toast.
Cheers,
everyone joining the toast.
Cheers,
do you
everybody.
Do you have any of your portfolio companies here in the Nazar?
I haven't seen the attendee list. Let me see. I don't think so. They got better things. They listen to me enough. I'm sure they want to spend Thursday night listening to me too.
All right. All right. Well, we all enjoy listening to you very much. And thank you so much for all of your knowledge, your expertise, and sharing with us. We really appreciate it. And we hope to have you on the show again. Thanks, Nazar.
Thank you so much, Rebecca. Thanks, everybody.
All right. Good night, everyone.
Bye-bye.
Good night.